Hello and welcome. You're tuned into CNBC TV18 Prime. Let's get cracking on a brand new edition of The Big C. I'm Manisha Gupta, back with your daily dose for commodities, cryptos and currencies. Well, first up on the show, we are now joined by Dileep Narayanan. He's head bullion and treasury, Malabar Group. Dileep, hi, thank you so much for joining in. It's all about the US Fed meeting in the next week now, with 25 basis points of a rate cut almost absolutely factored in. And there's a 20-25% of expectation of a 50 basis point rate cut as well. How would you look at gold now to the run up to that meeting?
Hi, Manisha. Thank you once again for calling me for this interaction. Well, Manisha, the market is been very volatile as we all know, and as we all see today, the market has turned to around per gram it is 10,000 plus for the first time. It's a record-making price. Having said that, again, yes, the U.S. Treasury is also awaiting the rate cuts, which, as you rightly mentioned, the rates have been already taken into consideration, though. But another 25 basis to 50 basis points will have an impact in the gold price again. But I foresee a bull market in upcoming days as we see the kind of volatility which is happening. Again, for India, it's double whammy because we have rupee, which is also kind of weakened. It's almost 88 plus now. So that is also one of the critical thing for India.
Dileep, the role that you play, I'm assuming you would have some calculations in hand on where the gold prices could go and how that would impact the company, industry in that sense. What are you working with now, let's say, for the next foreseeable future, if that is 6 months, 12 months, 18 months?
Well, we have a proper hedging mechanism in place as far as the gold prices are concerned, and we also have a 5-year plan for rather. But to talk in short term basis, we definitely have plans for the next 6 months. And very interesting factor is that we are seeing the festive seasons coming up now. Now it is going to start within a couple of weeks' time, and we are expecting a momentum to start up. Though the prices are going to be on a higher side, but the pent up demand will start coming in. So we are looking forward for that. The previous even the IIG's exhibition, which went off very successfully, have been one of the examples for that because the price has been rallying up during that time onwards. And but you see that there have been, the participants have been very positive about the orders being placed. So they are all waiting for the festive seasons to start, and then all the stock up, jewelry will start sailing through.
Dileep, are you in any sense expecting $4,000 an ounce in gold anytime soon?
Not soon, but I, if you ask me, I am anticipating a bull definitely, but the correction is something which everyone wants at this point of time. But I don't see a reason why gold would correct at this point of time. But definitely 3,700, 800 levels is something which we all can anticipate. And again, it's my personal assumption and based on what I have read and people and various industry people speaking about it. But yes, I feel that the gold would definitely move up. But at those levels, at what you're mentioning at 4,000 levels, it might take a little bit of time, but you know, I can't say that it's not possible.
All right. We will eventually get there. How are you looking at the gold buying right now? Because a lot of people that we speak to within the industry say that gold as an investment really seems to be picking up. So whether it is about coins or bars or the wedding buying that in any case would happen, but would you say it's more towards pure gold jewelry as an investment, or because the gold prices are so high now that it's more about studded and diamond jewelry buying? What is it that you have seen in the markets?
But it's a mix, Manisha. There is definitely a slack of demand for the gold jewelry because of the price going up. But then it is we saw a wonderful month last. We saw good sale last month and a previous month also, especially on the weekends. But as the price started moving up, and it has been very volatile after the US tariff has been declared. So that is one of the impact which is given to the gold. Uh, but answering your question, yes, the investment demands is also slowly increasing, but not as much as what you see in international markets. But I think the awareness of investment bars and coins in India is growing as the gold price goes up, because that's where the investment demand comes in. As the gold price goes up, you will see the core gold jewelry buyers taking a halt, and then you'll see the investors getting into the market to start buying it, and they would preferably buy the investment bars or the coins.
I'll just break this question further ahead, Dileep. So is it more to do with budget buying, which will continue to happen? But are you also seeing those kind of people who earlier wouldn't buy gold, but now want to get into it because the prices have given such great returns? So is it about high net worth individuals, ultra high net worth individuals, or is it about family houses now buying gold, institutions wanting to take a bit of a pie as well? Have you seen that market grow in that sense?
Overall, it has been a very positive part. Though the gold price have gone up, the affordability of buying higher quantity might have reduced, but people trust on gold has increased. I would say that, Nisha, and that trust is both in the household and on the investment part also. Both places you could see that, because on a weekend we see more of families coming in and buying gold, and even if there is no occasions, upcoming occasions, there are we have seen
Okay.
the rushes in our stores during the weekend. So I would not say that it is only the investment demand which is coming up when the price goes up. It is, I would say that overall people have the belief in gold, or the what they have seen, the volatility or the kind of return which gold has given for the last 2 years, or 3 years rather, but for the last 2 years it's been phenomenally high. So that has really given a very good trust on the gold, and that is the reason for, also the reason for buying the gold.
Oh, well, absolutely. 5 years ago or 10 years ago, 30% of an increase in gold prices perhaps would mean $200 and $300 an ounce. But at these levels, if there was a 30% rise, a repeat performance of what we've seen, that would mean $1,000 an ounce, wouldn't it? So the surge would be much higher, and the kind of numbers that we're talking about in that sense as well. But Dileep, coming to the tariff impact, and you talked about that, what is it that the industry is looking at now? What are we having in sense of conversations with the ministry, with the regulators? You also have presence outside India. How are you dealing with it? And I'm assuming US is a market for you too.
Yeah. So, especially diamond and gem exports, it's continued to have that export stress from US. The strategic shift to alternate markets are also underway, and definitely, I'm sure that the government will come with some kind of a consideration for a shocker like this. But initially, yes, everybody, especially the diamond industry, has got a hit. But there are talks going on with government, and government is also giving is being very positive about helping uh, the industry in finding out a way to beat out this kind of a issue which is happening now. And in terms of the economic reformations which the government gave, especially on the GSTs, the reform which has come, it is a very positive. Again, it is a very positive note for the domestic buyers, and that would add more confidence in creating the wealth in terms of gold. When it comes to export, there is definitely to certain nations. Yes, the the pipeline has slowed down, but I'm sure that the government will find out a way out to beat out this critical issue.
For the Indian market itself, Dileep, when we look at diamond, I mean, this is a market which is under-penetrated in that sense. With the gold prices doing what they are doing, is diamond also back in favor? Especially with the fact that prices also seem to be lucrative.
Yes. When we talk about jewelry, it is both plain gold and diamond studded jewelry, which we talk about. And it well, it's diamond always has its own demand, and at any occasions there are you know the buyers who opt for diamond jewelry, and there are buyers who opt for only for plain gold jewelry. But then you get that mix of crowds in all the festive seasons. So, being gold being only 20 to 30%, which is carried in a diamond jewelry, now it is almost 30 to 35% of gold, which is used in a diamond jewelry, studded jewelry.
Mm.
Again, the demand seems to be steady with no matter where the gold goes.
Dileep, I don't know whether you do a lot of silver or not, but markets also have seen a huge pickup in silver. Even platinum seems to be doing well. So there are various more things, a bigger bouquet now when it comes to jewelry. How are you looking at all of this performing going forward?
Well, overall, that's what the when we talk about jewelry industry, it also includes silver. It also includes platinum. Well, silver we do, but the quantum is not as high as what we do in gold. But in terms of silver, again, it's a buying pattern, right? I mean, the people who buy gold, the as I told you, the grammage of gold has reduced, would definitely be reduced because of the price, which is so volatile now. But at that same point of time, there are people who are also diversifying their buying towards silver. Platinum definitely has been ongoing. It has its own market, I would say, but I would say that platinum market has to do better, has got better scope, and I'm definitely sure that it would do better in upcoming future market. But silver purchase is also doing well. Silver jewelry is doing well. Silver ornaments, silver you know articles of buying is also been has moved up as we speak.
Mm. Dileep, I'll wind this down with one final question. So when you talked about on how you are nicely, properly hedged with the way the gold prices have been and very volatile, what is it that the consumer's reaction has been? Is it more about fresh buying, exchange? We do hear there have been some sales as well for people who've been wanting money. And with that cash to be delivered to those consumers, I'm assuming people bought at lower levels. For you also, you are paying on a higher rate here. How are you looking at all of those numbers?
Well, it is definitely increased, Manisha. The exchange has definitely increased. I mean, that goes without say, because at this kind of price, people who wanted to buy new jewelry, or want to wear a different design
Mm.
uh, against what they have at home, they would definitely have an exchange pattern running. And we have various schemes in which the customers are getting, they get are getting a better deal in buying new jewelry by selling of the old jewelry. But yes, the old jewelry exchange is also definitely increased as the price goes up. But as we speak, the festive seasons, the marriage seasons, you would see fresh buying happening apart from the exchanges. So that is what we are looking up for at this moment.
Oh, well, absolutely. Dileep Narayanan, thank you so much for joining in with that conversation. Well, we absolutely get the point that the prices are very volatile and further gains not ruled out. The jewelers at this point in time hedged. And as Dileep tells us that, well, yes, there is exchange and there are sales as well. But with festival season, fresh buying is something that we'll see picking up as well. We appreciate your time. Thank you so much. And with that, we'll go for a short break. When we come back, we'll put focus to the agriculture as a sector. Harsha Rai, owner Mayur Global Corporation, will join us on the other side. Welcome back. You're with us at Big C, and Harsha Rai, owner Mayur Global Corporation, now joins us on the show. Harsha, hi, good to have you. Appreciate your time here with us. Agriculture is the second biggest line because a lot of tariff conversations or negotiations seem to be right now stalled because of agriculture. We've seen Japan given and various other countries seem to be dealing with as well. And when it comes to India, while we are a major producer and a consumer for many of these pulses, the kind of imports that India did in the last year were at record highs. this year with the origin destinations, rather origin countries producing a lot more pulses with India as their destination. How have you seen the numbers move?
Thank you, Manisha ji, for inviting me for the discussion today. If we look at the global pulses scenario, definitely it has become more healthier and more stronger as compared to last year. If we look at Australia, Australia is about to come up with a very good production for lentils at around 0.7 million ton and chick around 2 million. Canada has just vested its peas and lentils, and their production estimate for peas around 3.5 million ton, which last year. Meanwhile, Lanka has come up with a very good pigeon peas production this year. Definitely, we are seeing a higher production in all the major origins across the world. That means we have ample supply to import from. On the other side, if we, as you mentioned, that yes, we saw phenomenal imports last year because from last few years we have seen that our pulse production has been on a lower side, and we needed to import. Out of that, almost 45% of the import basket was comprised of yellow peas, which actually helped stabilize the pulses prices overall. So yes, the global supply is much healthier than last year, and we have ample of markets to import from.
Harsha, there are lots of factors in place right now. I mean, one, of course, the kind of FTAs that India has with other countries, which perhaps we will see a widening of going forward. The currency is another part as well, which has been very, very volatile going forward. Geopolitics, a third one, tariff, a fourth one. How would you see all of this play out in the global trade of agriculture, especially pulses?
Well, I would say India is one of the major importer and consumer and producer pulses world. So if we look at other major regions which are basically growing pulse for India, like we import most of all, or I would say all the pigeon peas that Africa grows, or we import a lot of yellow peas from various origins. If we talk about Canada, the only market that they have right now to ship their yellow peas is India because of tariff that has been put by China on their peas. If we look lentils, red lentils is again one of the major market that Canada and Australia ships their major volumes to India. So I think looking at the tariff scenario and geopolitical issues, I think India is the one destination which is still allowing smoother import of pulses, and most of the markets would be keeping their eyes closely on Indian market. I would say the next 3 months are very critical in terms of for Indian markets to watch, or in the way, because we are our pigeon peas crop, which is one of the major crops, in a progressive stage and is going to be harvested in December. On the other side, we have our rabi seeding, which is going to start in next month, after next month. And simultaneously, we will see Australia would be ready to harvest their bumper crop of chickpeas and lentils. So particularly for India, it is very important to watch next 3 months. And probably, I would say maybe India needs a little bit of adjustment in its import policy in terms of more, I would say, more a measurable policy with maybe seasonal duty, maybe TRQ, to make sure that we have imports coming which are just needed and not being flooded. At the same time, the seeding window of our growers, which is in a month, is watched carefully, and they are given an assurance that they will be getting the fair price for their production in coming time. So yes, India is the market which has been watched very carefully, I would say, in the whole pulses scenario, global scenario.
Harsha, as you said, perhaps a TRQ and an MIP and duties and fixing up on how much imports can really come. There are various suggestions, perhaps, from pulses as an industry which have gone to the government. Which one would you say perhaps would work the best for India? Because many other countries are growing pulses only for India.
As I mentioned that all other origins are growing, the situation is better than last year. And as I mentioned that, we need to watch the government not have to particularly choose consumer or a farmer. We need a policy in which both can thrive, successfully. So a policy which is calibrated in the sense, I would say, a more watch on the volumes as to see, do we have same volumes of import as last year? Or I would say a policy, a seasonal duty, as I mentioned, wherein our growers are, in a confident way where they can go for higher seeding of the pulses to give us a sustainable production in coming years. Also, if required, a TRQ, a mix of, I would say, all of these, depending on different commodities. So we get as much as we need, and not in the delay. So, anyways, as we saw a lot of import last year, so still have to see how crops are harvested, as I said about pigeon peas, and how our rabi seeding is going to go. So, I would say not a particular policy change, but a mix of few collaborated decisions that we need in our policy right now.
Harsha, coming on the prices as well, because when you look at various commodities, pulses as an area, as a segment, has seen decline in prices. I mean, the only thing that I see in sense of inflation perhaps is sugar slightly on the higher side, edible oils definitely on the higher side, but pulses does not feature in that list. So the kind of price decline that we have seen in the Indian markets, is it exactly what we are seeing in the international markets as well? And do you see any correction on the higher side for pulses from here?
Yes, definitely. If you look at the international prices of peas, lentils, chickpeas, we would say the higher production is already discounted the current prices which are offered by these origins. And slow imports that India has shown in last couple of months has definitely resulted into these lower prices. If we look at Canada, it's almost harvest time for peas and lentils, and we have always seen the prices coming to their bottom levels. I mean, these are the prices where the growers are not getting any higher incentive on their peas and lentils. So I already those lower price factored in right now, the production and low prices. And if you talk about Australia in terms of chickpeas, we have seen much lower prices than what we traded last year. From $950 to now $550 is about, already a higher production has been discounted in the price. So I would say that origins do understand that the production overall globally is higher, and I think all the origins have already discounted a price a lot by now. I think price is quite at the bottom, I would say.
Harsha, coming on the fact also, because the Indian government constantly reiterates on how they would want to be self-sufficient in the next 5 years from here. There are targets for 2030 and 2032 as well. With the way India seems to be moving at this point in time, how achievable, to what percentage do you see that in next 5 years?
See, our pulses production, the major problem that I see with our pulses production first is the stagnant yields that we have seen for our major commodities like chana and lentils. So in order to get self-sufficient, it is very important that the work is need to be done on the seeds, the high yielding seeds. When I travel across the world, I've seen, like, for example, in Australia and other origins, I've seen their seeds for lentils or chickpeas are quite drought resistant and weather resistant seeds. So I think in order to get the pulses sufficiency, few things are still that we need to work on. Is first of all the high yielding seeds, weather resistant seed. If that is been done in couple of years, we can also see our production in India increasing, which has been very stagnant in last. Secondly, I would say if we put more pulses as a crop rotation crop, definitely we'll see more soil health, as well as more, example, if more pulses seeded in rabi, it is very good for their next crop for wheat, for more a healthy wheat crop. So I would say better yields, high yielding seeds plus promoting pulses into crop rotation can really result into a higher production in coming a few years, and then probably we might be very closer to our goals, because this is what I've seen in other major growing areas or origin across the world. From for example, last year Australia gave us a crop, say last year, sorry, Australia gave us a crop of say 500,000 tons of chickpeas, and last year it was close to 2.4 million ton. So if it is achievable outside India, then why not in India? So we need to really work on the scientific approach on how to increase the yields, and how to bring pulses more into crop rotation. And probably in few years, I think it is very much achievable. This is what I think.
All right. So, well, yes, lots of steps being taken by various government agencies when it comes to self-sufficiency in pulses, but we'll really have to see on where we move from there. Harsha Rai, thank you so much for joining us to make sense on what the global pulses scenario looks like and what perhaps India will do and should do to ensure that self-sufficiency, also some price improvement. But with that, that's all the time that we have on this edition of Big C. Thank you for watching.